Nebius Group announced its plans for expanding its data center footprint, adding new data clusters to feed the insatiable demand for artificial intelligence. In this video, I'm going to elaborate on Nebius Group's plans, how it plans to increase capacity, why it's increasing capacity so much, and if that's good news or what it means for Nebius Group stock investors.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the company said in their February 20 conference call with Wall Street analysts, they said that they are tripling the capacity of their data center in Finland, and the expansion is going well. The construction is going according to schedule, with the first part of delivery to be completed in the third quarter, and the remaining capacity will come online around year end. They also added a facility in France, which is already up and running, and recently announced their first US cluster in Kansas City, which is now in deployment phase and should be up and running by the end of this quarter. Additionally, they announced yesterday that they are deploying a new H200 cluster. Remember, the H200 is the Hopper technology from Nvidia. This is the GPU technology from Nvidia, which they expect to be available for customers in March. Right, so big expansion plans from Nebius Group. In fact, the company said that their opportunity is so large and they're trying to move as quickly as possible to capitalize on that opportunity, because demand for what they're building is so strong that they want to hurry up and build it, because they've already got pre-sales going. They've just hired many salespeople, and so they want to have that capacity available to make those sales. Of course, unless you've been living under a rock for the past year and a half, you probably know how strong demand is for artificial intelligence computing. These data centers require so much more computing power than the traditional data centers, but they're also so much more valuable. The total cost of ownership is significantly in favor of these newer data centers. And so enterprises are looking to these types of deployments, looking to add capacity, because it's so much in favor of the return on investment. If they spend $100, they get back maybe $150. And so it's a no-brainer for most businesses to switch to these types of data centers. But of course, Nebius Group, most of its customers are native tech companies or AI native companies that are building large language models or using the compute for inferencing. For now, those are the majority of the customers that Nebius Group has, but it's still very early stages, and the company is growing so quickly. Revenue is expected to jump to an annualized revenue run rate of $1 billion by the end of 2025. That's how quickly they're growing. They only recently became a publicly traded company less than a year ago. So their guidance calls for 100 megawatt in operations by the end of this year, and they're on track to deliver that. And they also have the option to expand these facilities to a total of more than 300 megawatts. And I really like these types of situations, and let me explain why. This is an option for Nebius Group. So let's say demand for this computing technology is as strong as they think it's going to be, right? And let's say they go on and they have demand that exceeds supply, and they talk to their customers, and their customers tell them, yeah, if you can add that extra capacity, we'll buy it from you. And if they have those agreements in place and they feel comfortable, they can go ahead and expand to the 300 megawatts. But let's say they get going and they find that they're not able to sell all of their capacity and they remain around 75 or 80% sold. Well, in that case, they won't take the option to expand to the 300 megawatts because they have more than enough as it is. They don't need that extra capacity to just sit around and spend the money to build that extra capacity when they don't have the customers for it. So this is an option that the company will only exercise if it's in its favor. So it's a situation where it's like either the company gets 0 or it gets 1,000, right? There is no negative here when you have this kind of an option. You have an option for the upside Either you get that upside or you don't get anything. So it's a nice something to have that could pay off if demand continues soaring the way it has. And by the way, the Nebius Group management team said that in January, around January, they got a spike in demand, like a surge in demand for its services because of the news that came out with DeepSeek, the AI model that came out from China. Nebius Group did see a big benefit from that in January. Now, management was cautious and they didn't want to make any connections and say, yeah, you know what, our demand is going to soar because of that forever. They do have some kind of optionality there where they're hopeful it will, but they're not making the jump to conclusions just yet and saying like, yeah, we're going to need it because demand is so strong because of DeepSeek. So they're significantly scaling up their data center capacity this year, and they will have more than enough to support that $1 billion annualized revenue run rate by the end of 2025 that I highlighted earlier. And secondly, they also have not yet deployed all of their H200 GPUs, right? Remember, this is the Hopper technology from Nvidia. They haven't yet deployed all of that just yet. They're still getting it set up. And then they have the Blackwell technology reserved, and it's coming online later this year. Blackwell is the latest technology from Nvidia. I was reviewing Alphabet's conference call, and Alphabet said that they are one of the first companies to have the Blackwell technology, and it's already up and running for them in their data centers. Nebius Group will have their hands on the Blackwell technology later this year. And so these GPUs and these powerful computing technologies are what's going into these data centers, and this is what customers are buying. This is what the customers of Nebius Group want access to, these latest GPUs, because they are sold out. They are sold out. That's why the management team here is saying that they have it reserved. They have their allocation reserved. And that's not an easy thing to get. Nvidia can be choosy with who they send their technology to because they're sold out. Their demand exceeds whatever supply they can produce. And of course, since they have a relationship with Nebius Group, Nvidia is an investor in Nebius Group. They own shares of Nebius Group. They're interested in the success of Nebius Group, so they want to give them an allocation to these Blackwells because they know that the marketplace demand for this technology is soaring, and if they allocate this technology to Nebius Group can pre-sell access to it, and they can generate revenue from the sales of this product almost guaranteed because of the existing marketplace demand for this technology. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.